If you think the Federal Reserve's efforts to uphold economic stability are the balm for a faltering economy, you're looking at the wrong graph. The prevalent belief that these attempts can prevent the US economy from teetering on the brink of disaster is a facade, a well-orchestrated charade aimed at placating the anxious masses while reality bleeds underneath. The real story? It's unfolding behind a curtain of manipulated statistics and strategic obfuscation. You see, the desperately optimistic figures you hear echoing throughout memento ghosts of CNBC headlines are nothing more than a mirage. June 2023, that was the seminal point, the time when the economic indicators began their unabated nosedive, dragging any remaining hope of genuine recovery into a black hole of monetary fear and asset inflation. Here's the anomaly you should be watching. The precipitous drop in consumer confidence, coupled with a crippled manufacturing sector, illuminates a path to a recession unlike any we've seen in recent history. All the Federal Reserve's monetary wizardry fails to hide the truth encapsulated within the grim Purchasing Managers Index, PMI, which plunged to a startling 47.5 in the second quarter. Below 50, as you well know, indicates contraction, and the consequences are rippling through global monetary policies like a shockwave. If you allow the mainstream panacea to placate your anxiety, you risk missing the deeper undercurrents threatening the global economy. The US economy isn't simply slowing, it's entangled in an irreversible gravitational pull downward. It's becoming a metaphorical crime scene, a hemorrhaging entity, pumping economic despair across borders and driving influential central banks into corners of desperation. The European Central Bank and the Bank of Japan, they're caught in a reflexive loop of emergency bond buying, hopeless attempts to counteract the financial vacuum left by a debilitated US economy. Even more insidious is the rising silver market. Why, you ask, does silver climb when other assets crumble? Because, my friends, as the dollar withers beneath the weight of manipulated monetary policy, investors shield their wealth in tangible assets. Silver becomes the harbinger of distress, its rising price a stark reminder of how fragile our global economic architecture truly is. The truth is, as you sip your morning coffee and glance at the stock ticker unfurling across your screen, the foundations of our financial system buckle beneath the pressure of artificial balances and vacuous promises. The veneer of stability is cracking, and while the facade may comfort some, it blinds them from seeing the real dangers lurking just beneath the surface. The game is afoot, and the stakes have never been higher. The next chapters will unspool further this fragile tapestry, exposing the mechanisms of manipulation that threaten to unravel an entire economic landscape. Stand firm and scrutinize with intent, because this is just the beginning of the real story, the one they don't want you to see. If you think the economy is simply pausing, take a closer look at the blood-red ink spilling across the PMI metrics. Beneath the headlines and the economists peddling optimism, there's a narrative nobody wants you to follow, the one carved in numbers that are too damning to ignore. The Purchasing Managers Index, PMI, a barometer of manufacturing health, has plummeted to a 47.5. This isn't just a number. When it dips below that crucial 50 mark, it screams one thing: contraction. It signals stagnation, and it's a clear indicator that the core of our economic machine is seizing up. The PMI, that stark numerical embodiment of industry sentiment, lays bare the chilling truth. Manufacturing sectors from Detroit to Dresden are grinding to a halt. This isn't a hiccup, it's a crisis point. Every point below 50 is a body blow to GDP. So, while official narratives assure you that recovery is just over the horizon, the data sings a different tune, the tune of a symphony unraveling. Shift your gaze to the surging silver market. Here lies the real canary in the coal mine. Silver's price is climbing, not out of speculative joy, but fear, a precious metal attracted like a magnet to panic. As the dollar falters under the heavyweight pressure of inflating policies, savvy investors flee to the safe embrace of tangible assets. We've crossed $30 per ounce and rising, every cent a testament to economic indifference, being shed by those who see the writing on the wall. Silver becomes the bulwark against swelling sea winds of fiscal instability. What the mainstream media won't tell you is this: rising silver prices are not an enigma, but a dire signal. It's a reflection of not just individual portfolio protections, but a collective vote of no confidence in the global market's status quo. This isn't mere hedging, it's an outright arming of financial defenses against an increasingly unstable battlefield. The global monetary policies that are supposedly shoring up confidence are in fact papering over cracks with trillion-dollar bandages. Central banks are diving deeper into a pit of quantitative easing, as if trying to fill a bottomless vacuum, trying to ignite a spark in a rainstorm. This is where the repetitive cycle plunges you into the depths of a depreciating dollar, tangling economies into a web where escape seems nothing short of a mirage. Look closely at the US economy, and you'll see it bears the marks of deep-rooted structural strife. As the GDP strains under the weight of deteriorating manufacturing and inflated promises, remember, silver doesn't rise on a whim. It ascends on the wings of market trepidation, born from the anticipation of the next phase of quantitative easing. It foreshadows a cycle of currency depreciation that no overenthusiastic central banker can reverse with the stroke of a pen. In this battle of fiscal might and credit illusions, one thing stands clear. Silver's shimmer is more than aesthetic. It's a grim beacon marking the path to a new economic reckoning. Prepare for the chapters to come, where we'll pull back even more veils of deception and illuminate the paths they don't want you tracing with their misplaced optimism and skewed bias. These aren't just numbers on a page. They're the signposts of a shifting paradigm. Chapter 3. Unveiling the macro background. If you're under the illusion that silver's recent ascendancy is simply an aberration, it's time to recalibrate your outlook. What we're witnessing is not an isolated anomaly, but a manifestation of a larger, underlying tremor rippling through the veins of the global economy. Quantitative easing, QE, is the unseen puppet master, and its strings are drawing ever tighter around our financial throats. When poor economic news wafts through the airwaves, silver doesn't just incrementally rise, it surges. Why? Because the markets anticipate an inevitable embrace of further QE. It's as predictable as the tide. Economic uncertainty flares up, and central banks resort to flooding markets with cheap money. The immediate effect? A short-lived euphoric boost in asset prices. The long-term consequence? A dollar stripped of its dignity, hobbling on crutches crafted from devalued paper notes. Economists wearing rose-tinted glasses might suggest that such interventions are mere blips on the radar of financial history, but you're wiser than to fall for that charade. This cycle is as ancient as alchemy, and just as deceptive. The dollar, under the corrosive pressure of relentless money printing, is in freefall. Your purchasing power is siphoned away, drip by drip, into a pit that central banks dare not confront directly. To grasp the scope of this monetary bloodletting, just follow the silver. Silver's rise is no fluke nor fleeting fancy. It's a resounding echo of mistrust in fiat currencies, a direct challenge to the notion that federal intervention can indefinitely stave off the specter of recession. Each uptick toward $50 per ounce signals another thread unraveling in the tapestry of conventional monetary policy. Look to the past. 1980s silver spike was a precursor, a harbinger of instability now mirrored by our present precariousness. But why is this relevant now? Because we're witnessing the next phase of this perennial cycle. The colossal stimulus injections and unprecedented rate cuts have carved a cavern at the heart of monetary stability. This chasm isn't just theoretical. It's felt in every manufacturing decline, every employment dip, every faltering dollar. The symptoms are irrefutable, the diagnosis glaringly clear. As the globe girds for more easing, silver adjusts, primed to leap. As economies stagger and the dollar wavers, the whisper of the bullion dealer becomes a roar. The hedging isn't just tactical, it's transformational. This isn't a hedge against inflation, it's a hedge against systemic failure, against a world teetering on the brink of financial entropy. Understanding this macro dynamic isn't optional for someone navigating these markets, it's essential. Silver isn't just a metal, it's your early warning system, screaming a message the mainstream refuses to air. Brace for the QE deluge and the subsequent depreciation that follows. In the chapters that lay ahead, we'll unravel further why these market signals are far from ephemeral. We'll dissect the geopolitical inclinations that clutch at monetary structures, pulling them tighter with intrigue and coercion. We'll delineate the worsening conditions of supply and demand, showing you how industry and scarcity conspire to amplify silver's ascent. Welcome to the revelation of the game they don't want you to see. Welcome to the truth beneath the market's glittering surface. The fourth chapter. Emotional insight and market understanding is an expose of the turbulent marriage between economic despair and the triumphant surge in precious metals, specifically silver. While mainstream economists might craft narratives of unified market behavior, they aren't painting the full picture. They ignore that the very core of market sentiment is slicing through the veneer of conventional wisdom. Market volatility is not merely a condition, but an emotional gamut, one that you need to decipher to survive and thrive. You watch as the dollar becomes a relic of its former self, and in that crumbling paradigm, silver sees its moment of glory. Its ascent represents not just a commodity's price movement, but the pendulum swing of economic psychology. As silver flirts with the $50 mark, what you must recognize is a collective unvoiced scream. The rules are changing, and so must the player. Consider the seismic shift in perception. For each blow, the traditional financial structures endure. A cracked PMI, a forlorn GDP report, silver is the cathartic release. Investors aren't simply hedging against inflation. They're defying the very constructs of fiat stability. Each ounce stacking up is a vote of no confidence in paper promises. This supposed safe haven is the lighthouse in the storm, the anchor in the tumult, where despair breeds opportunity for the astute. Understand this. The market doesn't just move on numbers, it gyrates on sentiment. sentiment. When the blind optimism recedes and bare nerves expose a reality of systemic decay, those positioned in tangible assets find themselves ahead of the curve. Look around. The whispers are now overt calls of opportunity, as institutions scramble to reposition, while the unwitting retail investor remains fueled by false optimism. This scenario is not without global implication. Silver's role as a fundamental industrial component further fans these flames. As demands in technology and energy sectors burgeon, the scarcity narrative tightens the noose. The psychological push for security through silver becomes inexorable. It's the embodiment of a future secured through tangible assets in an unpredictably amorphous present. The market's pulse quickens and slows with each geopolitical chess move, each economic misstep. As nations weaponize fiscal policies, monetary shifts amplify silver's allure. Industrial demand is not the only catalyst. It's the fear of global monetary mismanagement looming over investors' heads that truly stokes the fire. Every uptick is a prescient echo, reminding you of the precarious tightrope modern economies walk. Emotion in finance isn't mere sentimentality, it's pressure. A pressure that, unchecked, bursts into irrationality or rout. Recognize that while optimism may buoy the uninformed, foresight arms the discerning. As we continue this journey, we open more curtains shrouding this dichotomy of decline and expansion. These aren't merely financial trends. They're beacons of deeper market machinations vying for your attention. Navigate them with insight, and you'll be not just a spectator, but a strategist. The January 22 to 24, 2026 interval marks more than a calendar shift. It signifies an epical pivot echoing through the annals of economic consciousness. Pull back the curtain on this historical backdrop, and you reveal a landscape where silver's valuation dances on the precipice of one's disbelief, a symbolic rebellion against entrenched monetary decrees. Each quote pushing past the $50 threshold wields the force of a tectonic plate, rearranging the financial topography itself. Consider the paradigm shift. Traditional financial bastions crumble under their fractured ideologies. The crumbled PMI indices and ailing GDP pathways signify more than economic frailty. They're glaring signals of fiscal misdirection woven into the fabric of global trade. With each downward tick, silver surges, embodying resistance and resilience against synthetic liquidity constructs. The market is hemorrhaging certainty, and silver, as a bastion of tangible security, morphs into an investment haven, a verdict on credibility stretched beyond breaking point. To truly grasp this paradigm is to decode the pulse of a restless market yearning for authenticity. Every ounce hoarded is both a hedge and a symbol. A subtle yet seismic shift away from fiat illusions to tangible foundations. The diffuse transition occurs silently, slipping under the radar of mainstream analysis, but thundering to those attuned to subtler substrata. It's here, at the juncture of decision, that industry players must recalibrate strategies under a new sovereign of value. On the battlefield of economic warfare, silver's ascent finds its allies in geopolitical maneuvers and systemic recalibrations. The Arctic's contested resources, or the Greenland Ultimatum, overshadow this period, crafting narratives where realpolitik intertwines with commodities, each tightening of silver's supply chain. A deliberate stranglehold born from policy actions echoes through innovation hubs, catalyzing technological and energy sectors to navigate unprecedented scarcity. As this intricate dance unfolds, the market's complexion transforms. The need for strategic foresight transcends traditional metrics. It's about interpreting what's unsaid in a landscape defined by surreptitious alignments. Misinterpretation is the privileged enemy of those who refuse to adapt. Understanding these dynamics is the intelligent recourse. The ascendancy of silver, the narrative of three-digit pricing, isn't just an advancement. It's a redefined call to arms, a repositioning, a clarion call to strategists, not spectators. Journey forward with keen acumen, for on this path lies the rare opportunity to redefine legacy under the auspices of a revolutionized monetary perspective. Engage with this shifting reality not through reactive processes, but proactive foresight, fortifying a portfolio poised for adaptation in this burgeoning era of economic recalibration. Chapter 6, Silver's Price Dynamics. You think the silver market is stable, predictable? A naive assumption. Beneath its serene surface lies volcanic potential, ready to obliterate complacency. The recent parabolic price action is no mere anomaly, it's inevitable, a symptom of deeper market dysmorphia. Imagine silver not as a commodity, but as a sentient entity, rebelling against a fabricated narrative. Plunge into the abyss of the recent trading sessions. See how silver defies gravity. It's not driven by blind speculations, but by a squeeze, a merciless retribution against years of undervaluation. The precious metal isn't just a bystander in this market, it's the quiet architect of a financial quake, shattering antiquated models that failed to foresee the palladium paradigm shift. Why has silver awakened now? The answer lies within the industry's neglected corridors, anticipated yet ignored deadlines, manipulated supply chains, and relentless industrial hunger. As the industrial sector claws for resources, silver's supply diminishes, leaving a chasm that's rapidly reaching crisis levels. The phrase decreasing supply doesn't even scratch the surface. It's a systemic dry-up, a vacuum that market manipulators can only mask with paper contracts for so long. Silver's pricing surge is fueled not merely by mining output, but by geopolitical tension and fiscal mismanagement. Every geopolitical move, from tariff wars to resource diplomacy in the Arctic, for instance the Greenland Ultimatum, tightens the supply noose. The silver industry isn't just struggling, it's suffocating, gasping for raw material amid aggressive stockpiling by nations hedging against monetary instability. Now, witness the spread, silver futures soaring beyond reach, a testament to the gaping chasm between physical scarcity and financial excess. The premium on immediate delivery isn't just a technicality, it's an orchestrated squeeze, a market correction that's tearing apart the facade of economic equanimity. This isn't a trend, it's a rupture in market logic, an unavoidable crescendo to the cacophony of ignored warnings. As you delve deeper, consider this. What if the recent fluctuations weren't chaos, but clarity? A lens revealing the shortcomings of central banks trapped in their QE labyrinth. Analyze the data, reconsider your projections, because this isn't just a spike, it's a megaphone screaming the truth. The fractured state of global economic policies and the unyielding march towards tangible value. Don't be a voyeur to the meltdown. Interpret the unsaid, the unseen. A new stratagem is essential. The strategic chessboard demands recalibration, and silver is not a pawn, but a knight maneuvering beyond predictable confines. Embrace this volatility not as a threat, but as the opportunity to harness the violent potential of a long underappreciated asset. Reality isn't shifting, it's transforming. Assert your position in this metamorphosis, or be swept away by the relentless tide of change. Chapter 7. Chronology and Catalysts of Crisis. In a world where financial headlines are but smoke and mirrors, the true architects of chaos remain shadowed behind legislative misdirection and geopolitical brinkmanship. While the mainstream media dazzles you with tales of day-to-day market fluctuations, the real narrative is buried deep within the layers of calculated maneuvers and bureaucratic diversions. This crisis was not born of market whimsy, but meticulously crafted through key events that shattered global complacency. Central to this unraveling is the notorious Greenland Ultimatum, a diplomatic flashpoint that has realigned the balance of power and resource control. Picture this, a seemingly innocuous territorial dispute escalating into an all-consuming vortex of geopolitical tension that threatens to swallow financial stability as casually as a black hole consumes light. Let's pull back the curtain on the seismic ripple effects triggered by this ultimatum. The scramble for Arctic dominance, rich in untapped resources, has strained already fragile alliances. The USA and its supposed allies stand in awkward opposition, a dance of strained diplomacy that sends shockwaves through international markets. The ramifications of this are grimly predictable. Supply chains freeze, export restrictions tighten, and critical materials like silver become currency in a game of strategic hoarding. The US economy stands on unsteady legs, teetering under the weight of its macroeconomic deficiencies. Key indicators blaring recession, a weakening dollar sliding towards oblivion, and yet the public remains blissfully unaware, entranced by the siren's call of seemingly robust stock indices. The Fed's policies are no longer just misguided, they are the very gaslighting mechanisms that trap a nation in its illusion of invincibility. And yet, amidst this unfolding chaos, silver, a lifeless metal to some, but a trusted sentinel to the astute, emerges as the prince in this perilous game of chess. Its rising cost mirrors the soaring demand, catalyzed by a world desperately seeking shelter from fiscal missteps. This isn't just hedging, it's a financial insurrection against the paper promises that have long shackled true economic value. The Greenland Ultimatum is merely one node in this sprawling network of tension. It beckons the urgent need for reevaluation of previously irrefutable economic models. As silver supplies deplete and geopolitical fires ignite, you're not witnessing a temporary anomaly. You're observing a historical crescendo. Each tick upwards in silver's chart is not a mere fluctuation, it is a chronicle of awakening, a drumbeat echoing through time, warning of the unprecedented volatility lying just beyond the horizon. In this chapter of economic history, don't just witness the crisis, diagnose it. Not through the lens of fleeting digital numbers, but through the tangible realities demanding attention. The game has shifted. Recognize silver for what it has become, the singular bastion in this sea of economic duplicitousness. This is your cue to rethink, recalibrate, and reassert your strategic position before the relentless rise leaves naught but shadows in its wake.